Hi guys, today we will do a live trade on short iron fly. That is, we buy one put, we sell put and call, and we buy again a call. Now these are just reference prices, but let's see how it works. Now if you remember, we used to trade on the Bollinger Band one set contracts because we want the price to stay within the band. Now it's contracting. So what do? We place the trade. You select the option chain and we have selected a 29th September expiry date. Today is 25th. So it's just 1 week expiry period because as you know, I have to make quick live trades so that you can see how it works. So the profit will be limited, but it will be helpful for you to see how it exactly works. So the middle number will be 317.50, the top will be 340 and the bottom will be 292. Now let's see. Now why I have selected these numbers? If you look at the chart, the top is 339.29, so around 340 will be the top number. The middle number will be according to the available option 317.50 and the lower number will be according to the lower BB around that number, although it's 291.66, but we will be selecting according to the available nearest option. So the first one is 292. So you can see we have selected iron condor. Why? Because if you right click it, it won't have many other options. It doesn't have iron fly. So iron condor is something that is really nearer. So that's why we have selected it. But as you can see, it's showing 10 options per trade, but we are using one option so that I can show you how exactly it works. Now, what happens in an iron fly? Here it is. In an iron fly, you buy one put. So you are buying, and this is the first put. So we are using 340. Let's use 340. Wait a minute. I can find 340 somewhere around here. Here it goes. The first is 340. Then we come to the next strategy. We have to sell put and call at 317.50. We have to sell put and call at 317.50. Here and here. Okay, and the last number is call at 292.50. 292.50. So we have selected 340 as a put right here. Then we have selected 317.50 as call and put. We are selling them both, see? And then we are buying at 340 put and buying a call at 392.50. Now if you look at it closely, it's saying a debit of 41.84. Let's see. 41.84. So we are making this debit, right? And once we place the trade, confirm the trade, it shows us break-even prices, max profit, max loss, cost of trade, buying power, resulting buying power, and the left buying power, and we click send. Now we go to charts. As you can see, we know that the price Bollinger Band is contracting, so it will stay within the band and we will get to keep the most profit. Now please do remember, the max profit and max loss that it is showing, at the end of the day it will be what I have told you, that your max loss is limited to what you are trading at according to the option strategy that you are using. So this price won't be showing it as max loss. It might change, but at the end of the day it will remain the same. Why? Because if you don't use those options, they will expire worthless, right? So if you have paid the debit, that debit will be gone. That will be your max loss. because you have already paid it. And if they expire worthless, you cannot do anything. That's how the max loss is fixed, although it will show the max loss shifting. But that change won't matter to you because if you won't use it, it will expire worthless and your loss is fixed. Now let's see how it works. I will keep on updating this lecture for every day of the trade. It's only 5 working days. Thank you. Hi. Now you can see that today is the first day. We have traded a non-directional technique. So we know that the market is going nowhere. It will stay within our band and will not go up or down. And that's why we have traded on the Bollinger Band. As you can see, within a day, the lower Bollinger Band has come up. The middle Bollinger Band has just inched up and the top Bollinger Band has fallen. So our rates are now going like away. And as they like move away and away from the Bollinger Band, then we start to have a like breathing space. We won't have that issue of what will you do if it comes to a rate, because we would know if it crosses the Bollinger Band on the top, then it is going on the top, and if it crosses on the low, then it is going on the low. So our rates are starting to go lower and lower and lower, and that's why we will wait for it. We will wait to see what happens next. And as you can see, for the non-directional purposes, it is for the first day moving in our favor. And we are trading a weekly options contract, so we only need to play for 5 working days. Today is the first working day, and at the end of the first working day, it has ended on the same Bollinger Band middle band. So it is telling us that the price is moving for our benefit. It is not moving up nor going down. So it is going straight, and it will help us generate good like trade. Because at the end of the day, we want the price to be non-directional. That's why we have traded this contract. And as you can see, the price is saying the same thing for the first day. Thank you. Hi guys, this is day 2. As you can see, let me zoom in. As you can see, the price is still at the same level. We traded on this day, and the closing on this day is 318.46, and the closing on this day is 317.06. So $1.40 down. But if you remember our levels, we are still in profit. We don't have any issue, not even a single issue, and we are in profit. The best part. So we have not to worry because we are already moving towards a good level, the best level. So we will sit tight and wait. We have traded a weekly option which will expire within 5 working days, that is coming Friday. Today is 27th September. So we know within 5 days it will expire. So we are worry is really reduced because we are seeing it moving towards our goal of going straight. It has been 2 working days since we traded 1, 2, and we have no problem at all. The best part. First day it went a lower, second day it went a bit lower, but our trading day is 5 working days. So we know only 3 working days are left, and within those 3 days it will be automatically be squaring it out, and we will be keeping a good profit. The profit that we had earlier in our mind to book on the expiry date, and it will be automatically be booked. So we don't have to worry about anything. The best part. Thank you. Hi guys, today is 29th September, early hours of Friday. Friday is our expiry date, and today it will expire. So what do we see? The price has dipped. Let's zoom in. We traded on this day, and after that for 4 working days it has gone down, 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 down. But if you remember, or buying dates are like currently showing profits, because in this transaction, in this strategy, we were paid upfront profits mostly, and those profits are reduced, but we are still in profit. Now the first reduction is commissions that we pay to enter this trade. Now it is showing us a danger phase because it is touching the Bollinger Band. If it closes below, then it means to get out. But as our last working day is tomorrow, today, Friday, so we have nothing to be done from our end because it will automatically expire. If it goes up, then our profits can increase. In other words, we need the price to stay within the band because our strike prices are on the top. So if it goes up or down, it doesn't really matter. What it matters is it should not go below this point. If it goes, then it will pose a real risk. And that real risk could reduce or even damage our profits by going into losses. So we will be looking Friday as a really most important point. That's what matters. Now if you remember, I told you to go for 1 month expiry period. Now why am I telling you to go for 1 month expiry period? Because in a month, what will happen from here, it will come back and will stay within the band. And this staying within the band is really good because the longer the time period, the more profits you can generate. The shorter the time period, the less profits you can generate. Now, why we selected shorter time periods? The reason that I selected shorter time expiry period is because I need to put this video onto the course. So I need to make it quick so that I can show you how the strategy works. And if I can show you a smaller profit in this trade, then you would know that this trade works. Because if on a shorter time period, I can show you a smaller profit, then on a longer time period, you already know that you can make good profits. And that's what matters. Because at the end of the day, these strategies are really foolproof. Your losses are really fixed. And if they're fixed, you have no worry at all. Because at the end of the day, what is the biggest danger in investing in stocks? Losses. But in these strategies, your losses are fixed. So if you're trading if you're trading a strategy 4 times and you're profitable in 3 times, then you're extremely profitable. Because at the end of the day, your losses are so limited that one strategy cancels the other one out. And in turn, not only cancels it, it gives you a profit. So if one strategy is successful and at the same time, in the next week or in the next month, the same strategy is not successful, then even you will be in profit because the profits always exceeds the losses. And that's the best part. That's why mutual fund, hedge funds, they use this strategy every time, each and every week, each and every month, because they know this is a passive income strategy without the risk. Because the risk is reduced in such a way that it's not even a risk. That's what matters. Now let's see what happens on Friday and then judge if you're in profit or not. Thank you. Hi guys, on Friday end, our trade in BIIB, that is Biogen Inc., ended at $313.12. Now if I look at it here, our short iron fly or short iron butterfly had a net credit or net income of $41.84 for one option contract. We had traded one option contract just to show you. If you would have traded 10 option contract, then this would have been multiplied by 10 and then multiplied by 100 shares. Why? Because one option contract is equal to 100 shares. Now we traded one put, that is we bought one put at 340, we sold put and call at 317.50, and we bought a call at 292.50, right? If the price would have ended at 317.50, we would have kept this whole as profit, approximately $418. No, wait a minute. Is equal to 4184 multiplied by 100 shares, 4184. But that's not the case. What is the case? Our trade, like a put and call strike price, was 317.50. Okay? And we deduct the last price at 313.12 because we have to buy it. So it's a $4 loss. So the initial profit of 41, wait a minute, 4184 minus 4.38, we get a $37.46. And $37.46 multiplied by 100 shares, we get $3,746. One trade, this much profit. And if you look at it, this was least expiry period. But the credit was simply awesome. So we traded it and we got the max profit. The best part. This shows you that this strategy works. I just picked a stock with the least amount of expiry period and boom, I still ended at the max profit. The best part. I only traded one option. If I would have traded 10 options, the profit would have been huge. And I have showed you each and every step. It was live trade and it shows you that you can get max profit. Even if you don't believe this profit, that's not a point. The point is the trade works. If it gives you $50 or $3,746, in both cases it is a profitable trade and it becomes your passive income each and every month. Now you understand how the mutual fund, hedge funds make so much money? Because they are trading multiple strategies, option strategies, and trading stocks as well. So they know they will have a monthly income as well. And if the stock increases fast, they can make good amount of money through that as well. That's what matters. Profit. If you end the total profit at this much amount, you will always love this trade. Thank you.